Josh screams silent, they don't know. Numbers hum where the cold winds blow. Trade winds shifting
Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hello, everyone. This is Kathy. Good morning. Let me get myself situated here and organized. Wonderful. Let me move my chair up. Now, if you can see me, hear me, good morning, Mark. Hello, everyone. Yes, wonderful. I'm glad that everyone can see me, hear me. Good morning. How is everyone doing? Good. Give me a thumbs up if you're doing well. Good morning, Armand. Good morning, Connie. Good morning, Hala. Let me move my microphone a little bit closer. Good morning, Cheryl, Gary, Alberto. Hello, everyone. I'm so glad you're here because we have a lot to talk about. And it's, a quiet start to what could be another busy trading week. So all of you are showing me that you're here because you value the importance of learning how to be prepared. And, I've been saying this a lot recently, which is that the markets reward the prepared. And the first step to being prepared for the new trading week is basically know what's going on, what to expect, so that you are not, suddenly surprised by some of the things that could happen this week. And that's my job. My job is to kind of get you all prepared and to make sure that, you aren't surprised by anything. Sorry, I'm getting a tickle in my nose here, but sorry about that. All right. Yes. So we are going to talk about, how to get you prepared for the trading week and some of the big things that you should be watching. But before I begin, I always like to get a sense of who's brand new. Who's just joining our stream for the very first time and, just joining us. Let me know where you're coming from so we can give you a little extra love, make sure that I pay attention to your questions. And then we'll kick off in just a minute. I'm just organizing my calendar and everything. Seems like Forex Factory is down, but there are 5 things that I think is going to be moving markets this week. Yes, thank you. Hello, newbies. And I want to talk about the 5 things that are moving markets. Welcome, Becky. Azamat, welcome. We are going to talk about the 5 things that are going to be moving the markets. And, let me see if I can change this description. No, I don't think so. But the 5 things that are going to be moving the markets. So take a wild guess. What do you think are the 5 things that are going to move the markets? I'm going to break it down for you. I want to see if we can have, some of our community here share what they think is going to be, some of the big things that are going to be moving the markets. What do you guys think? What's the number one thing that's going to be moving the markets? What do you think is the number one thing that's going to be moving the markets? Take a wild guess. Because right now, if I show you my charts, you will see that, let me share with you my charts. Give me 1 second. Share screen. Where are you? Canadian CPI will be moving the Canadian dollar, but won't be moving the rest of the markets, right? NVIDIA is always important. Trump tweets are always important. But I think that, first off, you can see Dow futures, stock futures in general are down this morning, but they're not really down that much. We had a tough week last week. Dow futures are down, following through selling. And I've said to you all often that I think that the market has peaked. Of course, we can always get something from left field, like Trump tweets, maybe canceling all the tariffs, although I don't think the cancellation of all the tariffs will happen until we're somewhere around here. It's kind of a latch-stitch effort. But instead, it is what many of you are talking about, which is NFP. Where is this? NFP, Fed minutes, Japan versus China, some of this stuff that Daymil is telling us. But yes, it's going to be a lot of these different things. And so, we've got a lot going on. And that means that even though we have had a quiet start to a sort of quiet start to the trading week, with stock futures down only a little bit, bond yields kind of mixed, gold, also down a little bit, the US dollar up across the board. This will certainly not be a quiet trading week. And it will not be a quiet trading week for everything that you guys have outlined. I mean, there's actually, I had 5, but there's actually 6 things that I think we should all be watching. So the 6 things to watch this week, and you know how I love to annotate my charts. Number 1 is, of course, going to be the Fed minutes. Now, you know that the last Fed meeting was a very tough call. Powell said that it was a very close call. We had one member vote for 50 basis points. We had one member vote for nothing at all. And when the voting record came out later on, we realized that it was extraordinarily close. And that is what really shifted CME Fed Fund futures and had such a dramatic impact on the markets in general. So we take a look at this. You can see that this is the CME Fed Fund futures. So if you ever read online or you see, on social that the market is pricing in 100% chance of a rate cut, or the market is a close call, what that comes from is the CME Fed Fund futures. And so from here, the CME Fed Fund futures, and this is something you can Google, just CME Fed Fund futures, the current interest rate is 3.25% to 4%. And so the market is now pricing in a 57% chance. This is a December meeting, which is the last meeting of the year, is also the next meeting that we have, that the market is pricing in a 57% chance of interest rates remaining where they are right now, 3.75% to 4%, and only a 43, which is less than 50% chance of an interest rate cut. And this has changed dramatically because a month ago, which really wasn't a month ago, it was only like 2 or 3 weeks ago, because they only go to a week, these odds were at 94% pretty much. So these odds were at 94%, which means that the market pretty much was completely pricing in a interest rate cut by another interest rate cut by the Federal Reserve. And so those odds have now dropped significantly. And it is because of this reason that stocks have fallen down, because when we have the market going from rate cuts to no rate cuts, that's bearish for stocks. I'm looking at gold right now, but it's bearish for stocks because interest rate cuts are good for stocks, and fewer interest rate cuts are bad for stocks. And also, we were just looking at gold. And as I said, with gold, when you have fewer interest rate cuts, or the market moving from thinking that the Fed is going to cut interest rates 93% to, pretty much a close call, that is also negative for gold, because it's positive for the US dollar, which is why you're seeing dollar yen at the upper right hand corner of the chart, because these Fed rate cut bets is single-handedly the main reason why we've been seeing the moves that we've been seeing over the past couple weeks. And therefore, this week's Fed minutes are so important, because they're supposed to tell us how close of a call was it? How do these Federal Reserve officials feel? What do they think is more important, which is inflation, growth, or uncertainty due to lack of data? So that is why the number one thing to watch this week is going to be the Fed minutes. The number 2 thing to watch this week is going to be the non-farm payrolls report. Yes, we are getting non-farm payrolls this week. We are getting the September non-farm payrolls on Friday. So mark that on your calendar. Friday, NFPs are coming out. Now, everyone's is trying to debate about, will it matter? Will it impact the markets, or will traders just shrug it off? Well, there's different ways to look at this. First of all, it's very late data, right? This is September NFPs, not October NFPs. Last week, the White House said that the October NFPs may never be released, but the Bureau of Labor Statistics says they've got the numbers for September, and they plan to release it on Friday. I think, and let me know if you agree or not, and I want to hear what you think, that it doesn't matter. that the market is so desperate for a jobs report that it's going to move on it regardless. Now, whether this is a lasting move or not, it remains to be seen, but this is Friday and this is the end of the week. And so I think regardless of the fact that it's delayed, regardless of the fact that we kind of know it's going to be weak because the ADP number was very weak and the ADP weekly reports are very weak, and we know that the labor market is weak in general, regardless of all that, I think that there is a very, very good chance that it's that the market, knows that the number will probably be weak, but I think that they're still going to be reacting to it. Now, the question is, how weak will it be? How weak will it be this week? And that's really the key, which is how weak will everything be this week? And regardless, I think it's going to move on it. I think it's going to matter. What do you guys think? Do you think that the NFP report is going to move everything on Friday? I mean, NFPs is usually very, very important. I want to hear whether you think NFPs is going to move everything. Give me a yes or no before we move on to number 3. We're going through the 6 things that you should be watching this week. So before we get to that, what do you think? What do you think, my friends? While I'm editing some of these things, you think it's going to matter? Say yes or no in the comments. Is NFP Thursday or is it Friday? I'm pretty sure I saw it being Friday. Let's ask our good friend Grok. Let's see what Grok says. What do you guys think? I thought I saw Friday. When will September NFP be released? Let's see what if our Grok was actually kind of slow for me. I saw it as Friday. I mean, they have no idea right now. Let's see, September. Maybe we'll go back to Google. September. Everyone's saying Thursday. All right, you guys are saying Thursday. I am going to believe you that it is Thursday. So yeah, it's going Thursday. We're going to have the NFP report. So still, you're right. Will be released on Thursday. Thank you so much. That's why we all help each other, right? So now it's going to be Thursday, and you're absolutely right. And it's probably still, I mean, all of you, I think, agree with me that it is going to be weak. So it's going to be very important, and it's going to matter. So I agree that the NFP report is going to matter. So non-farm payrolls report, thank you so much, my friends, on Thursday. Now, NVIDIA earnings on Wednesday. Yes, we've got NVIDIA earnings on Wednesday. NVIDIA has been kind of single-handedly driving the NASDAQ and also in many ways driving the market in general. So because it's going to be single-handedly driving the market, regardless of the fact that, it's NVIDIA is extraordinarily overvalued, it's going to impact the overall market in general. And so NVIDIA earnings are definitely going to be something to watch this week as well. And then we have number 4. What is number 4 on the list? Number 4 is going to be the Japan-China tensions. Now, they seem to be worsening. On Bloomberg.com this morning, it seems to be one of the top headlines. Now, this is the sleeper trade that I think that traders are not watching enough. The yen, as you can see here, is down against the dollar this morning. It's kind of mixed against all the other major currencies, but for the most part, it is weak. And this is the geopolitical risk that most of you should be watching. What happens is that the Prime Minister of Japan says that if China uses force on Japan, even if it's just some type of blockade, Japan will see it as a survival threatening situation. So China is quick to hit back. And they said that if Japan's military gets involved in any way, Japan will become a battlefield. Now, and then also over the weekend, a state-linked account said that Beijing could retaliate through sanctions and trade restrictions. So I definitely think that sanctions and trade restrictions will come first before military action on Japan. But these are two of Asia's biggest behemoths, and I don't think it would bode well for risk appetite in general, for the world in general, if these tensions escalate. So this is something that you need to be watching, because this is making the headlines. And even though it's not on the front page of Market Watch or the US media, it is definitely something that everyone else is watching globally. And something I think that could impact, just like NVIDIA earnings, it could impact the overall stock market, and it could definitely impact gold. So make sure that you're watching that as well. Number 5, this week we have the global PMIs. We have PMIs from the Eurozone, UK, Australia, even the US. So the global PMIs are extraordinarily important because they tell us everything about the global outlook. And in some ways, they are my favorite indicators because they tell you what's going on right now. Whereas a lot of the data, like, we just talked about September non-farm payroll, some of the data from the other countries, they can be very, very delayed, tardy. But the global PMIs are usually for the fastest, most recent data that we will get right now. And so they are very, very important. And then number 6, we have the UK and Australia central bank minutes. So the Bank of England is expected to cut interest rates at the next meeting. Australia, last week, we had very, very good jobs report. So overall, these things are expected to have a significant impact on pound, particularly to see how close they are to cutting interest rates, and the Australian dollar. So these are just some of the many economic reports that we have. Like, we also have, like some of my friends pointed out, we also have a lot of UK data, CPI, retail sales. If you look on my X feed, I posted this on Sunday, the entire list of things that you should be watching for. So I highlighted some of the things that we talked about, but this is, we've got Philly Fed from the US. We got the weekly ADP these days, which has become important. UK, we've got UK inflation data, retail sales data, Canada's inflation data, retail sales data. And so these are just some of the very, very important things to watch. So the point I want to make is that we're starting the week kind of quiet, right? Stock futures are down, they're slipping more. We're starting the week quiet. Gold is up a little bit. Gold is down a little bit. Dollar is up a little bit, but we got so much going on this week. So much going on that this today may just be the calm before the storm. And so there's a lot going on that, CAD, CPI, retail, all of these will move markets quite a bit. And these are all the things, depending upon what you're trading. If you're trading indices and gold only, then you should be watching 1 to 4. If you're trading Forex, you should be watching 1 to 7. Although I think we all should watch number 5, but 1 to 4 should be what you're watching. And these are the 7 most important things, just to name a few of the things that you should be watching this week. And, as I said in the beginning, stocks are beginning to roll over. I think they've peaked primarily because, we're getting into the end of the year. And we're getting to end of the year, and there's a lot, and we're still hovering at, if you think about it, the upper right-hand corner of the charts. So we're still hovering at near the highs. So given that we're still hovering near the highs, this is bad news. This is plenty, I think, and I want to hear what you think, because I think this is very, very important. If you had made, and many of you have, money in this entire move, right now heading into year end, are you going to stay long and stay strong, or are you going to take profits? If you were a major mutual fund, hedge fund, institutional trader who basically shows your worth in the return that you've made for the year, not your floating profits, but your banked in profits, what are you going to do? Are you going to stay long, stay strong, or are you going to take profits as we get so close to the end of the year? I want to hear, because how you feel I think is in many ways indicative of how the rest of the market feels as well. And I think it's very, very important to realize that, I mean, look, you guys are, I mean, Richard is saying stay long until the price dictates that's high. But, you know, I actually posted a video. At what point is the breakdown point, right? At what point is the key level? And basically the key level for the Dow, is going to be the, if we look at the YM, is going to be, I'm going to draw my horizontal line, is going to be pretty much, you know, somewhere between here and here, the 50 SMA and this swing low. For the NASDAQ, we've got NVIDIA earnings. And we had said that basically this level here, which the 50 SMA earlier this week was over down here, that this level here is pretty much the key level. Now, of course, you know, break down there, the main level is the 100 SMA. So the key level to watch in the NASDAQ is the 100 SMA, because it's the 100 SMA combined with the swing low, combined with, I think we were looking at, I posted this as a video, a fib. So all of this, the key level to watch in the NASDAQ as we head into NVIDIA earnings is going to be right over here. And then I'm sure the S&P is kind of similar. The S&P is a little bit more higher up. We've got, you know, this is the key level, but it's kind of bumping up a little bit. But this is the key level to watch in the S&P. And if we look at gold, because many of you asked me about gold as well, we can see if there's any kind of key fibs in gold. But, you know, it's pretty much been a one-way uptrend. But I would say that with gold, that the key level, I mean, we've got one level here, but I mean, spike lows are really important. This is where it broke out here. This is where it found support here. This is where it kind of found support. I think that the key level to watch, and this would be comfortably below the 50 SMA. So the key level to watch is basically list level. If we get below here, then I think it's done for in gold. And Bitcoin's had some really, really big moves. I mean, Bitcoin is at now the lower bottom of the chart. And so for those of you, you know, there's consolidation in the other markets, but there's actually strong bear markets already happening in some of the other instruments. Now, we don't have any fibs here at all. I thought we might have some fibs on the weekly chart, but you know, we're hitting some, you know, we've definitely seen some meltdowns here. Okay, here's an important fib. So we've definitely seen some meltdowns here in crypto for those of you that are trading crypto as well. By the way, you know, why in the world am I telling you about crypto? I'm telling you about crypto because we recently partnered out. You know, we are big fans of broker-backed prop firms. And so we did a lot of research. A lot of you are trading crypto and you're asking us, who should we trade with? So we recommend Breakout, which is powered by Kraken. They are, you know, one of the biggest crypto exchanges out there. They have very fair rules, you know, on-demand payouts, fast funding. If you look at their feed, you know, you can see that, you know, they give you all the information about why, you know, Kraken had decided to acquire them. I actually traded crypto this morning. I've been trading crypto using my EMA strategies with the EMA crossovers here. And I traded this crossover breakdown. I've been fiddling around with it, I'll have to admit. And so I had my breakout platform. Let's see if my trading dashboard and journal. In the beginning, I was mucking around with it. I'll be honest, I don't really trade crypto. But you know, this morning, I don't know if it shows my trades, but this morning I took 2 crypto trades. I'm still figuring out how this works, but on a technical basis, I traded Bitcoin to the downside. And this was a very, you know, this was a fast, big move. And so what's great about Breakout is that there's no time limit. So you can trade your regular stuff. There's no monthly payments. There's no reoccurring charges. And if you want to dip your toes in crypto, you can. So if you use the BK Save code, there's no discount. There's only 2% discount, the best discount they give everyone. But if you use the BK Save code on Breakout, you'll be able to also get access to our BK meters that we just created, the SMA, EMA meters, which you can use across any type of instrument. And for those of you that are not familiar with the BK meters, this is the BK meter. Tells you at quick glance that, you know, anything you're trading, in this case Bitcoin, is completely bearish to the downside. If I'm trading Eurodollar, it'll tell me that, it's somewhat bearish on the daily chart. On the short-term time frames, it's turning bearish, or although on the very, very short-term time frames, it may be turning a little bullish. So this is part of what I trade every day, which is tell me whether or not the trend is my friend. So if you use our link or our code BK Save at any of the firms that we recommend, like Think Capital, Apex, we'll give you the meter, and just emailed us your confirmation purchase. So back to the markets. Let's take a look at what to expect. We talked about the 7 things, actually, the 7 things to watch this week. The 7 things to watch: Fed minutes, non-farm payrolls, Nvidia, China, Japan tensions, global PMIs, UK, Australian central banks, UK CPI, retail sales. Taking a look at the economic calendar itself, we already had a bunch of data released. Japanese data was great. Industrial production numbers were good. Those numbers were good. We just had inflation data come out from Canada, and the inflation numbers from Canada were kind of mixed. The overall inflation rate was a little lower. The core rates the overall inflation rate, core rates were stronger. We can see in the Canadian dollar right now that it is weakened a little bit because let's see what our quick trend meter is showing us real quick. I deleted it while I was looking at it. But you can see that it's kind of churning upwards. It's bullish in the daily chart, 4-hour chart. So it looks like, it's quite bullish, and that we could continue to get a little bit of upside off of the data, and that the market has interpreted the Canadian data to be weaker. We had the New York Empire State Survey, really, really strong number. 18.7. The market thought that, the number was going to be lower, come in weaker at 6, but it came in very, very strong. But what's interesting is dollar yen is getting a little tired. Dollar yen is getting overstretched, and you're seeing that it's not really continuing its move higher because it's already getting an upper right-hand corner of the chart. Euro dollar, you're seeing here also, the market's not really paying too much attention to the Empire State. I don't think it's really that market moving. Tonight, we have the RBA minutes. That's going to be interesting. Tomorrow, we have some ECB speeches. We have ADP, the weekly report, because, the September NFP report that we're going to get on Thursday is super delayed. Everyone's becoming much more sensitive to the weekly report. That's why it's high on this calendar. And I do think that you should also be watching the weekly report. So the last week's number was very, very bad. This will be more market moving than usual. But so at 8:15, keep an eye on the ADP report tomorrow. Make sure you're aware that it's coming out because it's going to be very, very market moving. We have some ancillary data. That's pretty much the main focus from the U.S. Japan has some ancillary data. On Wednesday, we have UK inflation data. That's going to be very important. Remember, I told you the UK is very close to cutting interest rates. They could very well be the next country to cut interest rates. And so these numbers will help us decide whether or not that's happening or not. Pound is up today. It's bouncing. But if these numbers come in lower, it could end up being fading. From the Eurozone, we've got Eurozone inflation data. That is also very important. But from the Eurozone, ECB is pretty much done with cutting interest rates. So I don't think it's going to be that market moving. On Thursday, NFP. Where's my NFP report? Forex Factory was down for me earlier. They had a Cloudflare issue. Let's see if they're back up now. So if we're up until Thursday, you will see Thursday we've got the non-farm payrolls report coming out at 8:30. This is the September non-farm payrolls report. So, we talked about this a lot. Some of you think it doesn't matter. I know Richard thinks it doesn't matter. But I think that the market doesn't have much to run off of. There's still going to be a knee-jerk reaction, in my opinion, to the NFP report, to the average hourly earnings. And so watch out for that. That's red. It's significant. We have the Philly Fed index as well. And then we start to get the PMIs. We have the PMIs from Australia that is coming out, the CPI number from Japan. And see, inflation, the PMIs are very, very important. On Friday, we've got the UK retail sales numbers, the PMIs from the Eurozone, from the UK, so that we end the week with a lot of data. PMIs in the Eurozone, UK, Canadian retail sales numbers. So all of that will be very, very important. So let's look quickly on a technical basis where everything is standing. So YM here, you can see on the daily chart, I'm going to get rid that. We talked about this already. The support levels are the 50 SMA, the 1 hour chart. The shorter term trends are all shifting negative. 15-minute, 1 hour, 5-minute, 4-hour chart. These SMAs are all starting to turn bearish. And so I definitely think, that there are more chances of more losses than gains. The government reopened. It did not provide the boost that the Trump administration may have hoped. So they may have to come up with something else in their back pocket, if we do see a deeper slide. And then as for gold is pulling back. And there's the support levels at right underneath 4,000 at 39.50. So it's right underneath 4,000 at 39.50. Gold will rally if we get geopolitical tensions. Number 4, Japan-China tensions. But the Fed minutes, I think, will really be key. And everything else, 1 to 3, is going to determine where gold is moving. And then in currencies, Eurodollar, you can see the 1-day charts kind of mixed. The shorter term measures are kind of turning bearish. So the way I use this is I look at the shorter term measures to help me determine where the longer term is going to shift, because I trade on the 1 hour chart, but I also look at the daily charts. And you can see that's looking kind of bearish. The dollar looks like it kind of wants to rally. It looks like it's below the 5 SMA, which it has been moved below the 5 SMA on the 1D chart. So I do think it could move lower. Dollar yen, stay strong until this ends, right? Because it's at the upper right-hand corner of the chart. How high can it go? Well, how high can it go? We can look at some of the fibs from this move here and see if we have anything to key off of. We do have some resistance, which is right around this point here. I think this looks like the correct level around 157. Is where the resistance is. That's very far. 155, which is a big round number, is closer. But it looks like if we get above 155, we may not have much more resistance until then. Dollar Swiss, dollar Swiss is definitely very different from dollar yen, right? Dollar yen's upper right-hand corner. Dollar Swiss is the lower right-hand corner. So if you're going to go long dollars, I'd rather go long something that is not so overbought. Euro dollar short side, dollar yen long side may look better. I like dollar CAD because we are above all of the major moving averages on the 1-day chart, which is what this is showing you. And I love it. I love the fact that that's the case because I like dollar CAD quite a bit. Pound dollar, remember, we have the BOE minutes this week. It's rebounding. I think this is a fake rally. I think that people are going to sell underneath the 200 SMA because the 200 SMA is really the line in the sand. Aussie, we got the RBA minutes this week. Ooh, look at this. Almost a sea of red. Looks like we could get minimally, or at least we should get a move to 64.50, which actually isn't a lot. Kiwi dollar, also quite bearish on multiple time frames, 5-minute, 15-minute, 1 hour. You can customize this meter to whatever you want, and you can put it wherever you want. But Kiwi is deeply oversold. Kiwi isn't like some of the other ones where I think it has more opportunity downside. Pound would be a sell on rally. Kiwi would be a sell into weakness, maybe into over weakness. So this is where I think you have to take things into consideration. Also, as one of, Fred is pointing out, dollar yen's in danger zone. 155 is where we can get verbal intervention turn to physical intervention. But I have to say, it's important to realize that Japan is an export-dependent economy. So they are more likely to act on physical intervention and come into the market and buy the Japanese yen when it is, or to basically come into the market and either buy or sell Japanese yen when it is too strong, not when it is too weak. Because when it's too weak, it benefits the economy. And the reason why the yen is weak is because the growth is not enough for the BOJ to hike interest rates. So in many ways, you can argue they're coasting on this weakness of the Japanese yen. So therefore, I think that, you're going to hear more verbal intervention. I don't think you're going to see much physical intervention from the Bank of Japan or the Ministry of Finance. The physical intervention comes from the Ministry of Finance, not the Bank of Japan. So either way, my point is you're not really going to see it. So bottom line, these are the 7 things to be watching this week. And hopefully I've given you a good framework of, what's happening. Any questions? I'm going to welcome Boris, who's going to roll into live trading. Make sure that you click on, my link tree, look in the description of this live stream video to get a list of our curated brokers and sponsors. If you are trading futures, we recommend Apex Trader Funding. You know about that. If you're trading CFD Forex in the US, we'll recommend Think Capital. If you are looking for a free funded program, lots of traders love Axie Select. And then if you are looking to trade crypto, we recommend we recommend Breakout. These are our sponsors. They're the ones paying for these streams for you. So definitely check them out. Boris, in terms of BTC, is it going to dive deeper? BTC is a risk measure. It's a risk off. So if you think that stocks are going to fall further, then BTC is probably going to be down here. The most important thing to know about BTC is that its its beta is much higher, is very high. So that if the stock markets are moving a lot, Bitcoin will always have a bigger move than that. All right. Any other questions? Boris, hello, welcome.
Hi guys. How's everybody doing? Good. Why am I getting a feedback here? I
do not hear feedback, Boris.
I'm getting a feedback. Okay. Hi. How's everybody doing? Good morning, good evening. Hi, hope everybody's having a great day. Everybody's having a good morning. You guys know my one and only time to trade with you is today, so we'll do a little bit of a trading, and then I'm off to Melbourne. If you guys want to watch my show in Melbourne, it's absolutely free. Let me put the link in here. If you hang on a second. If you register for it, you're going to get the review, you get the video playback. And the thing that's really interesting is that this is really all my forecast for 2026. So we're going to dissect every single market. And I'm going to try to figure out the best likely scenarios for all those markets. Those of you who remember last year, we did a pretty good job. We said dollar was going to really weaken, gold was going to go up. Those were really good calls. So it'll be interesting to see what 2026 brings to us next year, and I'll be happy to discuss that. So make sure everybody who's listening to me right now, I'm actually going to do the same thing on Twitter right now. If you guys are on Twitter, I'm putting the link right then and there. All you got to do, it's totally free. Just register for the webinar so that you can get the recording if you want it. Okay. I'm also going to preview a couple of really, really cool risk control things for MetaTrader 5, one-click trading tools for MetaTrader 5, which are going to be totally free for everybody, and all of the other cool stuff on TradingView as well that we've been working on. So it'll be both a full overview of 2026 coming with trade ideas and market analysis, as well as a tool demo that I think you guys are going to really, really like. So please be sure to register. It's going to be at 7 p.m. Thursday, Melbourne time, which I have no idea what that is going to be in New York, but I don't think it's going to be too terrible. It's actually 7 p.m. No, it's going to be very early New York time. So for sure, if you're anywhere outside of, if you're in U.S., in Europe, just register for the webinar so you get a chance to watch it on demand, because they're not going to release it except to everybody who registers. So it's hopefully going to be very useful. Yeah, it's 3 a.m. Eastern. So that's why I'm telling you, register for the webinar so that they can be sure to send it to you in an email, and you will get the full recording and watch it when you. Yeah, it's midnight in LA. I know. It's all going to be. That's why we're taking registrations, because look, guys, I'm going to be in Australia. We got to accommodate the Asia crew, and it's going to be very, as far as timeline, it's going to be very Asia-centric. But the ideas are all going to be very global. I think you're going to find it very interesting, especially if you guys are trading macro with Kathy. We'll talk a lot. I mean, there's some really interesting conversations about the yen, I think, next year that are going to be happening. I read a super interesting analysis of the yen carry trade that could be a really serious unwind next year. So these are things you really want to be aware of. as far as macro ideas, so that you guys can fully be prepared for for global trading in 2026. Plus, as I said, I got some really cool tools that I want to share with you guys. So hopefully you really like all that. So that being said, you registered from Germany. Looks good. Thank you so much. Thank you, Clean Saber. See, Clean Saber listens. Be like Clean. Be like Clean. Follow and execute my commands. Thank you so much. Thank you. I really appreciate it. Thank you guys. But please be registered. I'll put the link on my Twitter feed a couple more times. And I did email it to everybody, but just know that it's there. It should be really cool. So I got to tell you something interesting today. I think I should start with a confession. It's a good one. Let me actually get the chart, the screens up. Oh yeah, Kay is totally reminding me of. Oh my God, we had unbelievably positive response to the Profit Tools Max story, mainly because obviously everybody wants to lock down the lifetime access to BFF and lifetime access to Zip. So let me see if I can put the link in here. Kay's already put the link in there, but let me just do it again. That sale is going to end in like a day or two. So this is like literally the best, least expensive price you're going to be able to get. So please, if you haven't signed up yet, upgrade. Make sure you lock it all down so you guys can have the access to it. Plus, there's some really good discounts. If you're new to the room, if you're like just a new member and you're like paying, whatever, $197 a month, this is a complete waste of your money. You should absolutely get the full tool set plus the upgrade that gives you like access to all of the coaching and all of Kathy's funded coaching for like 6 months for far less money. So go ahead and do that. Those of you guys who are trading MetaTrader 5 and want the CFD versions of all these tools, I'm happy to give that to you as well as all the trading tools in there. So there's a lot of stuff in there. This video quality seems to be very good. I don't know, like Monday seems to be good. Who knows? Or maybe I got better lighting, or I'm just the stream today is better. Although I got the black eye, the black bags under my eyes are clearly a sign of good video, right? Anyways, thank you guys for all of that. Be sure to take care of Profit Tools Max. Be sure to register for my stuff. A lot of cool stuff going on here. Let's take a look at the charts, right? Actually, before we take a look, let's take a look at the charts, and then I got a kind of confession to make. I want to talk to you about something. Let me rearrange everything on the screen here. Let me go to a different format. Now this, go to my little screen format, and hang on, media assets. Sorry, I got to go find the right thing. Here we go. Okay, this one, and let me put the tool set up here. And share screen window. This share. Okay, cool. All right. So before we start talking about trade ideas, it's what time is it now? It's like 9:30. It's just market. It's just opening up. We're kind of unwinding a little bit. That's fine. We'll give it a few seconds. I gotta tell you something really interesting, which is sort of my final parting thought before I go to Australia and come back next week. The most important thing in trading, everybody thinks the most important thing in trading is winning, right? And I absolutely disagree. What do you think I think is the most important thing in trading? What do you think, if you were to guess, what do you think I would say is the most important thing in trading? Put in your answers here. I'm just curious, because I'm going to, let's see if I can pull this up. I'm going to show you something. It's confession time for Boris. It's really not even confession. It's just facts of life. Let me see. Let me go to reports. Hopefully this will pull up. It never pulls up. Look at this. Look at this ugliness. This is what I want to talk to you about, right? So what do you think is like the most important thing? Executing your trading plan? Yeah. That's all important, but it's all bullshit. following a trading plan, consistency. Yeah. Those are all nice to have things. But you know what is really the most important thing in trading? Risk management, follow rules. Yeah. No, it's not. You know what it is? I think everybody who trades for a long time kind of agree with me. The most important skill in trading is coming back from losses. Nothing else matters. Fucking winning. Winning is easy. Winning is just a function of your setup. Your setup works, you win. Boom. It requires zero fucking skill if you have the setup, the structure, the execution. You just, 90% of the time, you're not winning because you just didn't execute your setup properly. But winning is absolutely, especially the kind of setups we have that are like 85, 88% accurate. Winning is a given, right? That doesn't matter. You could win 100 times out of 101 and still be a loser because you don't know how to come back from losses, right? That is the hardest thing to do in trading. So that is apropos of just saying something interesting. Let me see if I can actually pull this up. Holy shit, I don't even know. What the fuck is this not showing? Oh, is this it? Yeah, this is it. Look at this. I know. Let me zoom in on this. Look at this thing. So notice what I'm doing. Remember, my whole job is I'm trading 1s and 2s. Sometimes I'll trade 5s. Maximum I'll trade 10s. These are all micros, right? But look at what happens here, right? Look at what happens here. What the fuck is this, right? So you know what this is? This is me forgetting that a while back, I had, I was trading a eval account that I was just trying to YOLO the account. I left the account at 50 micros, which is 5 large ones. And I totally forgot to change the setting, right? So I'm going back to trade gold. I hit the buy button without, of course, looking at what the fuck the volume is. And I hit 50, right? And I'm like, what the hell? And I'm like, wow, this thing is moving $100 a tick. I'm like, what the fuck's going on, right? Whatever. And I look at it, I go, oh my God, I'm short 50. I should be short like 1, right? So, needless to say, the day starts well, and then I just simply put myself into a big fucking hole, right? Just do it. Keep going. And then I literally, just to show you, just work my way out of it, $1 at a time, $1 at a time, $1 at a time, $1 at a time, until I bring everything out back up to positive. You can literally see me, putting myself into a big hole, right? And then literally $1 at a time, I'm kind of bring it back, so on and so forth, right? The irony of the whole thing is here, you just see the P&Ls, right? And it just literally climb it back to a tiny little P&L by the win. So this feels like a win because of just this one big error on my part, right? And that's the thing that was actually the best feeling. The feeling wasn't, you wasted the whole morning basically being flat. The feeling was, holy shit, you fucked up and you managed to get out of it instead of burying yourself deeper into the ground, which is what 90% of all of us do. And yours truly, 95% of us do this all the time. That's the skill. The skill isn't in winning. The skill is in coming back, right? Now, the ultimate irony of all of this, by the way, just like the ultimate irony of all of this is that, let me just pull this up. This is actually really, really funny. So the ultimate irony of all of this was, if I go to gold, let me show you the trades. Yeah, the ultimate irony of this is that this was the 50 trade. Had I stayed in it, right? First of all, the first thing I did was the moment I realized size was too large, I got out of it. I did not think twice. I got out of it. But the irony, of course, is that had I stayed in it, this thing was a massive, massive win. This would have been like a $500-600 win, for the opening day. No, it would have been like $1,000 win. It would have been $1,000 win, just a huge win, for the size that I'm trading. Had I stayed in the account, doesn't matter. It doesn't matter. It doesn't matter. It doesn't matter that the one time you get lucky. The whole idea is that for the rest of your life, you need to be good, right? You either want to be one time lucky or you want to be good for the rest of your life. If you want to be good for the rest of your life, you trade your size, you trade your plan, you trade your target, and you come back from losses like this. So it was just, I just thought it was funny. That was the story of the morning today. Now in the meantime, as far as now I'm back to wealth charts, and as far as the trades themselves, as far as the setups go, the setups have been really great, right? Setups have actually been super, super good. And I'm going to review with you the setups. There's a bunch of new people in the room. First of all, you know what I want to do? I want to hear from all the new people in the room. Tell me I'm new. Tell me your setup, or just just tell me I'm new. Because if you tell me you're new, I will reveal to you exactly what we do, so it's not a mystery. So you guys can actually follow the trades as I make them. So let me know. I missed a couple of setups, kind of riffing about this, but I thought this was a much more, we do 1,000 setups every single day, all day long. I thought this was a little bit more important for us to kind of hear. This was the only setup I did on wealth charts today. I thought it was more important to kind of talk about this. Hey, Ben, nice to see you. We have lots of Bens in the room. Who else is new? Yeah, you've done that, right, Bob? You've done that, of course. Yeah, absolutely. Understanding why losing is happening. Yeah. What's the question? Have I experimented with 200 SMA with 80 MA? Oh yeah, 80 MA will work well. I mean, it probably will work even better. Honestly, I don't optimize. AO, I'll just call you AO. I can't pronounce your name. I don't optimize, but I'm almost certain it'll probably work better. And maybe 2026 we'll try to tweak that up a little bit. I have no doubt. The faster the turn, the more sensitive it is to. Remember, all we're doing is trading rate of change. We're trading rate of change and going to the flow. We're trying to figure out what's the most likeliest next move. That's our whole job, is to predict what's the most likeliest next move. So probably 8 SMA wouldn't be a bad improvement. I don't disagree. Yeah. Hamza, nice to have you. Nice to have you. Where are you guys from? Where's everybody from? Ben definitely sounds like he's from America. That's definitely an American name, or a British name. Who else is new in the room? Come say hi to me. So while you guys are saying hi, let me run the setup for you, because it's very, very cool, very interesting, and very, very effective. We're trading the 2-minute chart, right? This is a 2-minute chart. So we're trading NASDAQ and gold, and we're trading our favorite structure called DOTS structure. DOTS is something that I invented. It's our own little indicator. The indicator is available on TradingView and on Wealth Charts. So for those of you who want to join my coaching, you get access to this indicator, and you have the full tool set to be able to find the right setups. The setups that we trade are super simple. We're always trading the dominant trend and the dominant counter trend, right? So like right now, the dominant trend is down. This 200 SMA, the 8 SMA is below, right? However, the counter trend right now is actually up. The dominant counter trend is up. You see the prices are above the 8 SMA. The slope of the 8 SMA, which is this little green movement, that's really the most important of all the inputs that we have, is actually turned up, right? And if I was trading this, what we would be doing is we would be trading the turn trade. And the turn trade always starts in a counter trend move with a white dot, which is the early buy dot. However, if you look at this, let me go to my favorite boomer tool set, the magnifying glass. As you can see over here, this is a white dot. This is a candle that breaks the high of the prior candle, produces a white dot, tells us that there's positive buying momentum, but the slope hasn't really turned green yet. We haven't really taken control of the buying. The next candle, however, is a green dot saying, yes, we're going to take out the highs and the slope is green. And when we have that confirmation. We love that. We take that, boom, straight up. Trade goes up, and we have a good time with it. Another variant that we like to trade. This is probably the most dominant. This is the easiest one to trade. Another one we like to trade is called the pull away trade, which is like when the candle pulls away from the moving average, means it's so strong it doesn't even touch the moving average. And we paint it white, and the first one over there, we love to trade that as a trade to the upside, right? With trades with trend, let's see if gold is with trend yet. Now gold is also counter trending. Gold is sort of, it was negative, and and then it kind of turned itself around to the downside. Let me just kind of run you through how I would trade gold if I was trading it with trend, with a dominant position, which means to the downside. So here's where it gets interesting and very, very important. Here's gold, right? And it's showing us a sell signal in a counter trend mode right over here. However, we would never, ever in 100 million years take that sell. Even though it's negative trend, 8 is below 200, you say, oh, it's negative trend, I want to take this sell. No. You know why we don't take this? Because the whole near-term posture is all bullish. The trend here is all green. We never sell on a green slope in this type of situation. So we have to be patient and patient and patient until this candle over here. This candle finally turns the slope red. We still have a red candle. We get short over here. 2 targets, 6 stop. It retraces against us, and boom, it eventually hits the target. It's better to wait and be wrong than to be early and be 100% wrong, right? So that's what we do. That's what we do kind of on a minute by minute, day-to-day structured basis. And there's lots of opportunities for us. Generally, we are able to find a trade every 10, 15 minutes. However, sometimes we get into a long stall, and then maybe no setups, for like an hour. I have a very limited time with you guys today. I got about 15, 20 minutes. No, maybe even 15, 20 minutes, because I got to hop to the airport. So I don't know what setups we'll have today. But these are the basic structures that we trade all day long, every day. And of course, there are guys in the room right now that are trading it super well. I'm getting all these incredibly wonderful emails for people telling me they're doing $1,200, $1,500, $1,800 days in gold, just following the dots, staying very, very simple, staying to strategy, not doing anything except trading momentum in its proper format. Why is this not moving? Did something stall? What's going on over here? It looks like my wealth chart's kind of died. Let's go to the 14 account. The wealth charts just die. Am I looking at a dead market? Yeah, it looks like it's a dead market. Look at this. They're dead. So we're gonna have to transfer over to yeah, wealth charts must be dying. All right, so we can transfer over to gold, and I'm just looking at this this trade. This is actually like a very, very decent counter trend. We like these, the white dot on gold. I'm not set up for this, so I'm not really trading. So I'll just fake trade it with you guys today. So let's say I'm long here. I'm going to be long here at this 477, and my target will be. Oops, hold on a second. There we go. And my target is going to be 79. Let's see if I can make 79 here. So 79.2, whatever. So I'm in it. I'm in at 77.2, 79.2 is my target. Yeah, I'm really. This is like the most bogus way of trading, but I'm just giving you ideas of how I'll be trading it. And what is that? 71 would be my stop, right? So 6 stops would be 72, 71, somewhere around here. All right, let's see if price hits the upper end of this thing as a trade. You guys can follow me on paper trading. Let's see if it hits me. What's 79.3, and boom, we're done. And then again, the white dot trade proves itself to be worthy of conclusion. So I am a wonderful paper trader today. I'm just I'm not trading the trade of 8s because I don't want that account is just not set up. It looks like I don't know what happened. Well, charts is having a stall issue, so we'll just monitor trades off of this. Now, the other thing I love, this is my guilty pleasure. Okay, maybe we have another chance at my guilty pleasure. Now, again, this is the do as I say, not as I do trade, meaning that this is a stupid ass trade. But I love doing these trades because I don't know. I have so much fun doing the fade trade. I love to sell tops, buy bottoms. It's a terrible, terrible affliction. But if I do it at certain parts of our graph, I have a really reasonable chance of success. So in this particular case, I love to sell. The reason why I like to sell this instead of buy this is because we had 3 consecutive white candles, right? I love to sell the 4th one. So let's imagine I'm just going to imagine that I'm short this 199, 25, basically 25,200. I'm going to try and take it back at 190, and 230 will be my stop. So let's see. I'm going to put the Alt H to 190, and my stop will be like over here at the 30s. Now, if I, very often I pay the price for my stupidity, and this thing just pops me right through the 30s. And if it does, again, I'm trading very, very small. I give myself one other permission at the candy bar, right? Take a bite of the poisonous apple, which means that if I get tagged out at 30, that's extraordinarily overbought, right? And it's unlikely that generally when you have these kind of vertical moves, you do have just some pullback. I'm basically trading the pullback structure. So if I get tagged out, let's imagine I go back into this thing at 30 at a little bit more size. But again, this is just definitely do as I say, not as I do trade, just my own little guilty pleasure. Let's see if this comes back down into the 190s and retraces a little bit. And if it doesn't, then I'm happy to kind of do a secondary short somewhere around here for a quick scalp back. This is not our structural setup. This is the exact opposite of what we're supposed to do. We're supposed to trade momentum, but I love to trade counter momentum at certain points on the chart when it's not extraordinarily stupid. Like this is a relatively reasonably intelligent trade, given what we're seeing on the charts, right? And we don't have anything else to do. Yeah, it could be. Look, every single charting platform always has outages. You just can't, hopefully they'll fix it soon. But it's just the nature of the business. It's internet. They could be losing packets. Who knows? I don't know. Their feed to the CME may have been stymied. So I came out a little bit too early. It looks like, right? I mean, it just came back to my flat position and popped itself out. So let's imagine I'm most likely if this hits 30, I'm going to be stopped out, right? And we're going to watch this, and if it stays at around these levels, let's see if I get virtually stopped out, and then we're going to come back and try to sell the 30s to take back the 20s if it doesn't, if it doesn't. But so I literally managed to escape the Grim Reaper for the time being. I'll log out, then log in. Okay, you just have to log out and log in. That's what everybody's saying. Let me just try that actually. Let's try this on here. Let me just kill this. Leave. Let's try this again. I'm still stuck, guys. Log out. Discard changes and proceed. Log in. 18. No, my account is still stuck. Is this moving? Nope. Well, it actually went up, but then it kind of just died. I don't know what's going on here. All right, let's go back to this. All right, so we got tagged out, right? And now we're going to watch this white candle. And wherever this candle ends, I'm going to re-short myself, just for shits and giggles. Like, remember, this is just me putzing around because I don't have any momentum trades because this thing is all running away from us. But let's imagine I'm going to get short. I'm going to get short over here. Let's say the 38s. I sold the 38s, and I'm looking for 28 as my target. And actually, boom, and I got done. You see, and it comes back down. I'm able to recover my my short. Now, if you want to press the trade, okay, great. We're going to wait for this candle to close again at like, what is it? What time is 21 seconds? All right, let's say I'm short 50s. Now I'm short 50s. I'm going to go back to 40. Let's see if it comes back to 40. And my stop is going to be around the 80s. So I took one back. If I used sort of double, triple size, I have a reasonable chance to recover this thing. So now I'm short 50s. We're looking to come back to 40s. If it's going to hit 40, then I can recover this whole trade. But obviously know that this is a very much a guilty pleasure. It's not something you should be doing all the time. But it's still, I actually don't think that this is a bad idea for like advanced traders to do, because the possibility that you have a small retrace, a third of a retrace of any of these big extension moves, usually is quite high. It's really, really rare. And boom, you see that? I mean, the whole idea is to find the highest probability trades. I don't think this is a bad idea as a high probability trade. I don't know if any of you guys, followed me on the on any of these trades. I'm actually curious. Anybody short with me? Anybody did the degenerate short or the degenerate long, right? On this one. But this was a very good example of what I mean about, like, you talk about 1, 2, 3, 4, 5. The beautiful thing is the indicator really tells you how extended the move is, and your probability really becomes quite high. I mean, this probably was like a 90% probability this thing was going to work, and it did. Just curious. Anybody fade that with me today? No. So everybody, if you don't, anybody fade that on TradingView with me? Nope. Yeah, World charts are still frozen. Yeah, I'm sorry about that. All right, well, you guys got the idea. I mean, I just kind of wanted to. Yeah, it sounds like they're having issues. It's rare. It's actually very rare. They're almost always up, but I guess World charts is just not working today. Yeah. Miguel, you did it, right? It's fun, right? Like I'm telling you, it's like it's such a cool trade. It doesn't happen a lot, but there's like 3 or 4 times during the day when you get these incredibly powerful runs. You get these, you get triple, quadruple whites or triple, quadruple purples, and when you get like quadruple purples, like even over here, you see this like sort of. This is not a super great idea because these are short purples, but it doesn't matter. Quadruple purples, you buy in the purple, the bounce back is a pretty strong idea that there's a chance for a bounce back. I like these trades because as long as you don't overdo them, they really provide very nice quick money, and 10 points here, 10 points there adds up. Okay, all right, guys, I gotta run. I got to go to the airport. Everybody, please, again, here's the macro registration link. Everybody have a good time. Please register for that. Enjoy yourself. Focus on the setups. Just be patient. There'll be setups. This thing is trend positive, which means that when this thing comes back down, produce a white dot against the green slope, that's going to be a trade for us. We'll take that trade to the upside. So it was a lot of fun paper trading with you. I haven't paper traded in ages, but paper trading is better than no trading. At least you guys get to see the setups and understand the structures of what I'm doing. So hopefully that makes sense to you guys. All right, guys. Everybody have a wonderful day. I will see everybody next week, and enjoy. Take care, guys. Bye-bye.